Defying the stereotypes, breaking the rules. You can't tell me what is for me. Yeah. You got a lot more behind those pretty eyes, but you gotta let the world see. Yeah. So shake it out. Now is the time while you're waiting. You're not good enough. Now is the time while you're waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Oh, don't let them bring you down. And don't let them bring you down. Oh.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. My name is Van Richards, and we have a great show for you today about two really significant stocks. We're going to talk to you about a media stock and a financial stock to get started with. The whole idea here is to give you an understanding of how these stocks are structured and give you some anticipation of what may happen in the future. Now, we can't predict the future because we don't have a crystal ball as much as anybody else, but we can give you a basic understanding of how that you could use stocks for whatever that you're going to use them for in your life. And usually we talk about retirement here. If you go actually and you look in the notes that go along with whatever platform that you're visiting today, you'll see the connection to the retirement planning strategy that we talk about. But we're going to go ahead and get started into this. This is the daily NASDAQ stock update. We have two stocks to talk about today. We have a media stock, and I'm going to kind of give you a preview into this, kind of like that you were sitting on Shark Tank. And I'm going to tell you a little bit about this, and I'm going to ask you a question. I want you to think, is this a company that I would invest in? The first company that we're going to talk about really today is going to be a financial stock, and this is a very, very interesting stock. This is a company that has connections to thousands and thousands of customers, and it may even have a connection to you too. Let's look at exactly what they do. They do electronic funds transfer, payment processing, and loan processing. And this is a company that's called Fiserv. You may not have heard of this company, but this is a significant company in our economy. This is a $64 billion company approximately. They do payment processing for a lot of community banks and a lot of different credit unions, and they make the financial processes for these institutions more efficient. One of the things, though, that we're going to look at today, though, is that these companies are under a lot of pressure. When I say these companies, it's not the only financial processing company that exists. We're going to look at some other companies too, because really when we look at the stocks that we're reviewing today, we're going to review this. And if you have questions, since this is a live stream, make sure that you enter them in. We'll see if we can get to them toward the end of the show. But really when we're talking about the different stocks, there's three different things that we're going to cover with those stocks. One is we're going to talk about the earnings growth, because if you don't have earnings growth, that's going to affect the stability of the company itself in the long run and the profitability, and they're not going to be able to keep the share price up or keep going from that standpoint. So it's not going to be a profitable investment for you, the investor. The second thing that we want to look at is we want to look at industry strength. Now, I mentioned that Fiserv is not the only payment processing company out there, not the only financial company that deals with that type of business. So we're going to look at how they compare with their peers from that standpoint. Then we're also going to look at their stability. We talk about it in the relationship of a company's moat. How well are they to stave off their competitors? So let's get right into it. Let me make the screen just a little bit bigger for you. so that you can follow along a little bit better as we go through this. They ended up the day down, as did a lot of different stocks. Tesla's been down over 10% over the last 3 days. Actually, they were down over 10% today. And the NASDAQ has been off over 10% for the last 3 days. The market itself has been on a tear upward for quite a while, and I really don't think that this is something that's going to be a huge concern from that standpoint. Markets don't always go up. I know if you listen to Dave Portnoy on Barstool Sports, he says the market always goes up. Well, no, it doesn't. Look at the market today. It does not always go up. It goes down sometimes. So let's keep that in mind as we go through everything. When we look at what happened with Fiserv over the past 12 months, we see that actually they started 12 months ago higher than they did today. They were at $103.30 a share. They ended up today at $94.98. So they're actually off for the year of 8.05%. But according to a lot of analysts that are out there, this stock is still overvalued. So you want to be conscious of that if you're getting into the market and you're looking at buying different types of stocks. Now, if you're buying into an index like the NASDAQ 100, that's the index that we focus on in this show, you get a lot of diversification because we can be wrong about some of these different things. The analysts that are analyzing these stocks can be wrong too. They can look at it and say, hey, this is an overvalued stock, and this stock could have a significant advance forward. We're going to talk about one of the things that could influence this stock going forward here in just a moment. But the thing that drives value is going to be earnings. And one of the big things that gives analysts an understanding or gives them the thought that a company is going to be overvalued is when they compare it to their earnings. And the value that you're going to see, say, for example, we're going to look at Morningstar's valuation on this particular stock in just a moment. And the way that they figure their value is based on a ratio of earnings. A lot of times it's going to be 15 times earnings going to be what they peg as their fair market value. But when we look at what the actual earnings have been over the past 4 quarters, that's what's driving the anticipation that this particular stock is overvalued. If you go back a year, we look at Q3 in 2019, they projected that they were going to have $1.03 a share. They were off a penny. It wasn't a big difference, it was a little less than 1%. But when you start to add that up and you have a $64 billion company, that really makes a difference over a period of time. The only quarter, Q1 of 2020, was the only one that they met their expectation. Not every company gives projected earnings. Some companies don't give guidance on that. We're going to look at another one here in just a few minutes. But as we go and we look into these different investments, the idea about investing in stocks for retirement is that there are only 3 reasons that people invest in stocks for retirement. One is going to be for the growth. We've talked about that. Number 2, we're talking about right now, which is dividends. The reason I'm bringing this up as a big point right here is that this company doesn't pay dividends. Now, the next company we're going to look at does, but if you're looking to build a portfolio of dividend-paying stocks, this one would be eliminated from that perspective. But you still have to look at what the growth of earnings are to make sure how they're working going forward. And that's really affecting how the price of this stock is being projected as we go forward. How does this company rank with its peers? How's it stacking up? When we look at Fiserv itself, there are maybe 3 or 4 different companies that have very similar businesses. Fidelity National is actually another one that does payment processing and has the same type of relationship with customers. There's a company called Jack Henry and another one called Connect One Bank Corp. Now, you can follow along if you look at the colors. That's the way that I coded this. The blue is going to be Fiserv. And you can see here the dancing cursor. This is where the market went haywire between February and March. We didn't see much change from that standpoint after that point in time. The only company that really went a little higher was Jack Henry. We see that Connect One Bank Corp actually was the laggard among the 4. So if you think of it from the perspective of how is Fiserv stacking up against its competitors, it's right there in the middle from that viewpoint. It's not off tremendously. It's just right there in the middle. So as we go forward, though, I do want to remind you that even though we're looking at historical information, never take historical data as an indicator of exactly what's going to be happening in the future, because it's not a future guarantee. Okay, the one thing that I do want to bring up to you today is a little bit of news about I can't say it, Fiserv. We'll get that out in just a second. So let's look at the news on this stock. Okay, if you go to ExxonMobil for gasoline and you pull up and you have Alexa, you can now use Alexa at almost every ExxonMobil across the country to fill up your car. You basically pull up, you log in with just ask Alexa on whatever your product is. If you have an Android product, you just say something like, Alexa, fill up. Then Alexa's going to say, what pump are you on? And you're going to say, I'm on pump number 7. And then you fill it up. You can get out, fill your car up, and automatically you have it debited from whatever account that you have set up connected to Alexa. Now that's a really big deal from the standpoint, because there's a security standpoint when you had to get out and you actually had to take a card and you had to insert it and take it out. There have been skimmers that have been stealing data. So this particular type of data transfer eliminates that security issue. ExxonMobil and Fiserv are the first companies to do this. So I think that you may see it continuing on. If it becomes more popular, it could be a driving force in the value of this company. So even though that we're talking about the fact that Fiserv is a little bit undervalued or overvalued at this point in time, it could be driven forward by some new technology that they're introducing at this standpoint. So as we move on down the road, let's look at the possibility of sustaining their profits. Fiserv has a very good inroads to a lot of community banks and credit unions. You'll see that their payment processing business is really considered a wide moat of their business. Now remember, what exactly are we talking about when we're talking about the moat of a company? It's this. The moat of a company is the ability of the company to sustain profitability against competitors. Now, when we look at Fiserv, their primary business is payment processing, and that's really their wide moat business. But Morningstar, which I get a lot of this information from, assigns them a narrow moat. Why would that be? The reason is because recently, actually, it was in the last quarter of 2019, I believe. We'll see in just a minute. Actually, it was in the third quarter of 2019. Fiserv had a merger with a company called First Data. And some people call it First Data. First Data has a business that competes with some of Fiserv's customers, or actually, that's the other way around. When we look at it from this perspective, Fiserv competes with some of the customers of First Data. And what could happen is that some of those businesses, Bank of America is one of them, who deals with First Data, could sever the relationship because of the merger between the two, because Bank of America does processing of payments and et cetera, just the same thing as Fiserv does. So did you get that? A little confusing, isn't it? But the point is that Fiserv and First Data have merged, and First Data, that might be the name of a new company coming out for them. Who knows? First Data is perceived as being a drag on earnings. So let's move forward from this standpoint, and I'll get the right words out. Okay. When we look at the current price, it closed today at $94.98. The fair value, which is that is tagged on there by Morningstar is $89 a share. And generally speaking, I mentioned it before, they tag the fair value based on the earnings per share. You know, we looked at earnings per share just a little bit ago, and those earnings per share were pretty mediocre from that standpoint. They weren't growing a great deal. In past days, we've looked at earnings for companies that's really skyrocketed in the past. This company hasn't. It's been pretty stagnant. So from the standpoint of its fair value, that's how they get their fair value. I believe that we're going to look at it from 15 times the earnings per share, and that's going to be the way that they're going to come up with their fair market value. So that tells us that they're actually trading at a 6.3% premium. They're trading at 6.3% over top of what their fair market value is projected to be. And based on that, Morningstar assigns them a 2-star rating. Now remember, the star rating doesn't really tell us whether they're going to be good in the future, whether they're going to be bad in the future. What the star rating does is it tells us the current valuation of the stock in itself. Okay. So let's keep moving on. Let's look at what other analysts are saying about Fiserv. Now, this will be interesting. When we get to looking at the other company, you're going to see that with the other company, there's only 2 analysts. Wow, there's 27 analysts that are looking at Fiserv, and 18 of those are going to say that it's going to be a strong buy. So what's that tell us the overall rating is? It's actually, I think I hit the wrong button, but that's okay. It's actually going to be a strong buy, not a moderate buy. So keeping that in mind, this is a strong buy according to the different analysts that are out there, even though that Morningstar is saying that its fair value is at a premium. And I have to remind you that this is not a recommendation for you to go out there and buy this particular stock. This is giving you news on what analysts are saying about this stock. So let's look at the next stock that we're going to talk about. Now, you know this stock. Let me describe it to you. Let's say that you're sitting there at Shark Tank and some guy comes on and he's going to pitch to you this company, and you're going to decide whether you want to invest in this company or not. And this pitch guy comes on and he says, I have a company that has the #1 news service in the country. What's the name of that news service? Ah, you know it. I know what it is too. It's Fox Corporation. Fox Corporation has the #1 news in the country, and that's really the crown jewel of the company. When we look at what the valuation is, think of it from this standpoint. When we looked at Fiserv a few minutes ago, and we saw that it was down about 4%, I told you that stock's overvalued, and it's more susceptible to market volatility. We saw it fall 4%. When we're looking at Fox Corporation, I'm telling you that Fox Corporation is probably a good buy. And what you're seeing is that even though the market was going to Hades in a handbasket, we saw this stock up for the day. Awesome. All right, let's look at some of the intricacies that are going on with this stock so that you can understand how it's working. Fox 1 year ago was trading at $33.16. Today, it closed at $27.84. So if you buy this stock, you get it at a 16% discount. It's on sale. Okay. The other bonus about this stock is this. They pay dividends. Dividends are great things. They're these.
The beauty of your side.
If you're thinking about using this stock for retirement, stick around, because the idea is it pays a dividend. It's a little different than the dividends of some other companies, where a lot of companies pay dividends quarterly. This one only pays dividends on a semi-annual basis, but it's still a 1.66% dividend, which is really not a bad dividend from that perspective. It's all driven by earnings per share. Now, if you squint, you look real close at the screen, you're going to see it says projected EPS in A. What's that mean? What it tells me is this: there is no indication. They didn't give any projected value for their earnings. So they just did it. They just had earnings that came out. So if you look at Q3 from a year ago, in 2019, it was 83 cents. Then we went to Q4, it was 10 cents. So you're going to see that their earnings that they're putting out there are not quite as consistent on a quarterly basis. That's one of the reasons why I think that this stock only pays dividends twice a year, semi-annually. If we keep going to Q1 and Q2, we had 93 cents and then 62 cents. But let's look at actually what's happening on a semi-annual basis. This is awesome if you are a dividend person. If you like dividends, this is a stock that you might want to consider. Now, I went back a little bit further than I usually do on stocks on this. I went back 3 years. The reason why I went back 3 years is because I don't have regular earnings that are coming out every quarter. They're a little more here, a little less then, and there's no guidance given on what the earnings per share may be. But let's look at what is happening with the dividends. That's a big indicator. If you're relying on dividends, you want to see that it's going to be on a regular basis. Now, there's no guarantee that this is going to continue, but if we go back to the last 3 years, every 6 months, like clockwork, they paid 23 cents a share. So, good for the dividends. Let's keep on going on and look at exactly how this company compares to its peers, because if you're not competing, you're not going to be a good stock to buy, or you're not going to be a good value. But you're actually going to see what has happened to a lot of the media stocks is they're beat down, because we're going to look at this stock. Yeah, this stock, actually, I'm going to go ahead and give you the preview. It's a 4-star company. You're going to find that some of these other companies that we're talking about are going to be higher rating. So they may be even more undervalued from that standpoint. So who do they compete with? Of course, CBS, Viacom, CBS, they compete with. They also compete with Discovery. They also compete with AMC. Now, I don't think this is the same as the AMC movie theaters. Actually, it is. It's just that they have a different division. They're putting out different types of products as far as entertainment goes, the TV station or the video also. But they don't have the news that Fox does. So that's one of the big indicators from that standpoint. But if you look at it from this point of view of we only have movie theaters that are showing movies, I think you'll see what's happened. Look at the gold. The gold is actually AMC, so you can see that they have floundered down because they don't have any money coming in from this standpoint. Yes, AMC is opening back up, but they're only opening up with about 25 to 30% capacity. They can't sustain that and keep profits going on for a long period of time. Fox, on the other hand, has kept right up there. Believe it or not, Discovery has kept with them too. Viacom CBS is lagging behind. But I have to remind you again, the past performance is no guarantee of going to be what the future results are going to be. Now, what's the sustainable profits? Remember the moat. I'm not going to play that video again, but remember, if you've got a narrow moat, you have competitors which are close by. We just looked at 3 of the competitors for Fox. Those competitors, all of them have really survived the worst of the pandemic. And there is a big demand for content for all of the media companies because people are bored. They're sitting at home and what are you going to do tonight? What's on TV? Nothing. If you have Uverse like I do, you go through all the channels and you see how many things you can buy. Or you go over to Fox or you go over to Netflix or something like that. And when you're really bored, you want to worry about other people's problems. So what do? You tune in to the news. Fox News is their biggest asset right now. So when we look at what the valuation is, the current per share value is $27.84. What Morningstar is projecting for this company is a fair market value, which is based on a ratio of earnings, is $37. So, hey, this stock right now, according to Morningstar, is trading at a 24.76% discount. Let's see what the other analysts say. Wait, before I go on. Yeah, this is a 4-star company. Okay, now, remember before when we looked at Fiserv and there are 27 analysts that were analyzing it and 18 of them said, hey, it's a strong buy. Well, the difference here is there's only 2 analysts that look at Fox Corporation within the survey of information that I utilize. So that's not saying that's all exists out there. But when we look at the specialists, the people that are the analysts that are specializing in the media, with 2 of them, they're saying this. They're saying that it is a strong buy. But I do want to remind you again, This is not a buy sell recommendation. This is just basically reporting to you what the analyst opinions are. Okay. So with that said, that's really all we have for today, folks. I want to remind you that if you need some help with your retirement plans and you want to get an understanding of how all this information could go into what you're doing, you can go over to my website at richardsfinancialplanning.com. You go down to the teal button, you click on it, you can find a time that you and I can get a chance to have a conversation. So with all of that, I want to see, let me see here what we have. Okay, great. Andre, thanks for the comment. Come back again next time. Join us on Facebook, Twitter, Periscope, or on YouTube. And it's a repost over on LinkedIn too. So with that said, I'm going to say have a great day, and I will talk to you tomorrow.